Microsoft has been making major moves in the market lately with the announcement that they will be acquiring Activision for $68.7 billion. Activision is a gaming company that publishes a range of famous video games such as Call of Duty and Candy Crush. While this acquisition will likely play a large role in Microsoft's attempt to dominate the gaming industry, more importantly, this acquisition will add over $2 billion of free cash flow for Microsoft. With Microsoft down 12% year to date, if you are a value dividend investor like me, then now is probably the time to consider Microsoft stock to your portfolio. I am a big believer that one of the best ways to make quality investment decisions is to find a stock's intrinsic value. So in this video, we are going to be using my ultimate stock valuation spreadsheet in order to find the intrinsic value of Microsoft and find out if it's a stock we should be buying. And so now we are currently looking at our Microsoft stock valuation spreadsheet, and on this spreadsheet we have 4 different intrinsic value models. We have on this tab Graham's valuation, then we have a discounted cash flow analysis, then a multiples valuation model, and a dividend discount model as well, which all 4 of these models will go into our output tab so we can find the intrinsic value of Microsoft. So if we come over here to our home tab, let's go ahead and insert Microsoft stock ticker and hit enter. And here it's going to show us our 1-year trend line. We can see they're down by a good bit from their all-time highs. Here we can see how they've been trading on our last trading day and some metrics for Microsoft stock. So let's go ahead and jump over to Graham's valuation model. And this valuation model was invented by Benjamin Graham, who is the author of one of the greatest investing books of all time, The Intelligent Investor, and he was also one of Warren Buffett's biggest mentors. Here we can see his original formula used to find the intrinsic value of companies, but that formula has since been revised for today's times, which we can see right here. But when we use this formula and insert all of these metrics, such as the earnings per share, growth rate, and a few other metrics, you can see we find an intrinsic value for Microsoft of $321.60. So let's go ahead and add that to our output tab and jump over to our discounted cash flow analysis. And the idea behind a discounted cash flow analysis is that you can use the future free cash flows of a company to calculate the intrinsic value. So in order to perform this model, the first thing I needed to do was to find a growth rate for the free cash flows for this company. So in order to do this, I looked at the historical free cash flows first. I have it set to where my model will automatically output the average growth rate, which you can see right here. So over 2016 to 2021, their future free cash flows had an average growth rate of 17.86%. So I took this into consideration, as well as industry standards and the fact that they have recently acquired Activision and projected a growth rate of 17.5%. I then used this to project the future free cash flows of the company, and the next step was to discount this back to the present value, which you can see right here. I then took the sum of these future free cash flows and added all the cash and cash equivalents from Microsoft, which is actually a reduced number due to the acquiring of Activision. I then subtracted the total debt and found that they had an equity value of this number right here. And then I took the equity value and divided it by the shares outstanding, which you can see led to a discounted cash flow price per share of $355. So let's go ahead and jump to our multiples valuation now. And here is my multiples valuation model spreadsheet. You can see here, just to quickly show you how it works, if I were to delete this, all this data would disappear. Let's say we want to compare Microsoft to Facebook. We can compare them to Apple, and we can compare them to Amazon. So we'll enter their stock ticker here. Let me correct Apple. And for a multiples valuation model, essentially we are going to use the price to earnings multiple to value Microsoft. So we can see these companies are somewhat similar to Microsoft, and they have an average price to earnings of 35.46. So what we do is we multiply this by Microsoft's earnings per share, and this leads us to a stock price of $317.44. Again, I have on my channel examples of all 4 of these types of valuation models. I'll leave links to my tutorials in the description if you have any questions. But let's go ahead and jump over to my dividend discount model. And essentially, the idea behind a dividend discount model is you can value a company based on how much they are paying out in dividends and what their dividend growth rate is. So in order to do this, you can see I took the historical dividend payouts for Microsoft and you can see what the growth rate for these dividends are. And you can see for Microsoft, it's a really high growth rate. They had an average growth rate of 9.86. So when you factor in a discount rate, you can see that Microsoft's stock price per share is $374. So let's go ahead and jump over to our output tab now. Here on our output tab is where we can see the intrinsic value for each of our valuation models. So for Graham's valuation, we had an intrinsic value of 321, multiples 317, DCF valuation 355, and our dividend discount model showed an intrinsic value of 374. And typically what I like to do is I will take an average of all 4 of these valuation models, and you can see in this situation we have an intrinsic value of $342 compared to the current price, which is $296. And something that I think is very important as a value dividend investor is to always apply a margin of safety, which is something that Warren Buffett does himself. So for this situation, I'm going to apply a 10% margin of safety and hit enter. And you can see based on this, my stock valuation spreadsheet will give us an acceptable buy price of $307 or anything below that, which gives us a buy or sell signal. So it is currently saying that we should be buying Microsoft, and it's saying it's a pretty undervalued company. So personally, I have added a few shares to this in my portfolio, but remember to always do your own research. If you'd like to be able to download this stock valuation spreadsheet for your own use, then you can head to my Patreon page at the link in the description. I personally do have a bullish outlook on Microsoft. I think they're a company that's going to continue to grow their free cash flows and dividend payouts for many years to come, which makes them a very attractive investment. But let me know your thoughts in the comments below on Microsoft and if they are a company that you will be buying into in the future. So with that being said, thank you guys so much for watching the video, and please don't forget to like and subscribe to the channel.